So today I'm going to talk about a new stock I have started buying into the portfolio. So a couple of weeks ago I sold out a position and that created a bit of cash and an opportunity to maybe add in a new position. And I saw this stock was dipping massively in the last couple of months and it got to an valuation that I was like, okay, I really like this valuation here. I'm going to start buying some shares. Now I am going to say that I have put this here. I would like it to go into the $50 range if it can. If it can get into that $50 range, that is where I start buying a little bit more. So I am praying, which is a weird thing to do that people don't understand. I am praying for it to go lower after buying. And the reason why is that if it goes lower, I can get shares cheaper and I think my upside is bigger from those cheaper shares. So we'll see what happens, but I'll go through this new stock. It's a bit of a deep dive. These videos do take a while to put together, so I do hope you enjoy it. Let's get started. And always, if you want to know what I'm buying and selling in real time rather than a couple of weeks later, the place to be is on the Patreon. Only £5 a month, supports the channel. You get my live buy and sell alerts, 2 exclusive videos and a Discord with 500 members on to talk about stocks, including myself. But let's get started onto this stock. So the stock is Etsy. I did start buying some shares in Etsy a couple of weeks ago, and since I have started buying those shares, they haven't really done anything. The stock's been basically flat. So like I said, I am hoping it gets into the $50 range. If it gets into the $50 range, that is where I start buying more and more so I can get a bigger upside on it. So that's something to bear in mind. But Etsy has had a tough time at the moment. It's currently an 8 billion market cap company, but you can see here it's one of those stocks that really peaked in 2021 as an e-commerce business. The sales went absolutely bonkers. The shares were actually around about $300 in November 2021. The shares had a big reality check with the shares coming down 75%. They did start having a bit of a rally during 2022 as the shares went up 76%. But from January, this has been a stock that hasn't followed a lot of stocks of having a good 2023. This has had a pretty bad 2023. As you can see here, the shares did get to $147 and then they've fallen 56%. And currently the shares are $64. That does mean they are the same sort of levels as they were pre-CV. As a few people will be shouting out in the comment section right now, that does not include share dilution, which is always something to factor in, but kind of shows you how low the shares have kind of got from that point of view. And they're pretty much sitting at the 52 close of $62. Now Etsy, I'm sure most of you guys will be well known of what this brand is. It's more of a niche between Amazon and eBay. So Amazon obviously is more of your bigger brands, your kind of more well-known brands, and eBay is obviously more in the second-hand retailer. What Etsy does, it fills in the gap, and it's been able to do very well in this space and continue to grow even with the likes of Amazon in here. And it's created a little niche for itself. It's the niche where people go to if they don't want to get that kind of normal big brand product. I want something a little bit more personal. I want to get something personalized. I want to get something handcrafted. I want to get something a little bit different, or I like this product but I want it to be a little bit, I want it to change the color a little bit. And that's what Etsy is. You get more handcrafted homemade products, which is something people are really supporting at the moment. And also the fact that people don't really want to go to the likes of Amazon. People don't want to get that big corporate brand. People want to go support these individual buyers, or these individual buyers that want to have an online store. They go to Etsy and you can get different products, like you've got seasonal Halloween shop, as you can see here, jewelry, accessories, clothing, shoes, home and living, wedding and party, which is very popular. People go to Etsy for designing their wedding, for example, toys and entertainment, arts and collectibles, craft supplies, gifts and gift cards if you want to get them. And it's done very well to create this little space that it has going on here. Now, obviously, what's a great thing about Etsy is e-commerce growth. E-commerce growth is growing rapidly, and it is forecast to continue to grow rapidly as well. And this is what we should see Etsy do. More people are getting more aware of Etsy, people are going to Etsy, people are using Etsy as their craft stores. So the traffic naturally is being driven up for Etsy as well, which is a really good area to be in. And they currently have really 7 core geographies, as you can see on the map here. So they can carry on growing these geographies to do very well. But there's also the option that if they ever want to expand into another geography, that they go do it, for example. It would be very easy for them to go to the likes of Spain and go, okay, let's take this platform, let's translate the language to Spanish, and then hopefully the sales do very well. So there's a lot of geography for them to expand into still. And they actually have 3 platforms. Most of it comes from Etsy, but they do also have another platform which is Reverb and Depop, which is an acquisition that they have made recently. Today's video is sponsored by Lightyear, and this section of the video includes financial promotions. Lightyear offers crazy convenient, simple and low cost access to stock markets around the world. The platform has over 3,500 stocks and ETFs, as well as lots of data and information about instruments and market movements, helping you make informed investment decisions. You can also earn interest on your uninvested money in three currencies, the euro, dollar and pound. Another great thing about Lightyear is it is now available on the web, allowing you to buy and sell and research stocks from the big screen. Interestingly, Lightyear is one of the cheapest platforms out there for long-term investing among other competitors such as Trading212 and eToro. They're driven to keep costs low so more people can access their services without eating into your returns. Lightyear is now available in over 20 countries throughout Europe, so if you want to join Lightyear, you can follow the link in the description or use the code JKR to get $10 fractional shares when you sign up. But let me remind you, investing always carries a risk and the value of any investment can decrease as well as increase, so be sure to invest wisely and do your research. Now, on the recent earnings, I actually thought the recent earnings were pretty good when you look at the valuation. EPS was a beat, 0.02, and revenue growth of 7.5%, beat by 11 million. That's a nice little beat there. Now, the big thing that I've noticed is that people looked at this and went, oh, look at this, it's supposed to be a growth company. And I've got to say, if it was a growth company, you'd look at that revenue performance and you'd go, that's a little bit poor. I want more growth for a growth company. But when you actually look at what the valuation is on this business, it's not valued as a growth company. It's valued as a value play. So if you're growing 7.5% as a value play, this is actually really good growth. And if you actually look at the profitability, this is a profit machine. They have actually just announced a 1 billion buyback program. Now, if you remember earlier, which I showed you, this company is an 8 billion market cap company. They're going to be buying over 10% of the market cap of this business. That's insane. But that's the thing that Etsy has, is a profit machine, so it can afford to buy back that amount of shares. Another thing that's going under the radar a little bit is the marketplace revenue. The marketplace revenue has been doing quite well. But what's been growing rapidly in the background is the service revenue. So this is where they're introducing things like pro accounts and advertising. Advertising, as we know from Amazon Web Services, for example, can be very, very profitable if you do it right. And you can see here that's actually the fastest growing part of the business, which is growing 17.5%, which is obviously really good to see. Now, if you do look in the recent accounts, they did say they have decided to sell their Brazilian marketplace, which is Elo7, which will in the longer term actually increase their profitability, which is actually really good, but it is having a little bit of, because they've got to recognize that as a loss in their accounts. The company looks like it's actually currently loss making, but when you take that out, you actually see that there's a very profitable business underneath this company here. So for example, if we do have a look at Etsy at the moment, you can see the profitability has dipped down here as it takes that one-time charge that isn't actually really a charge. It's not actually a loss on the statement, but they've got to put it down as a loss. But when you actually look out of that, the company is generating good revenue growth and good amounts of profitability. If you actually look at the profitability here, the company actually throws out 17-18% in profit margins. Actually, during the peak of CV, they do have 20% profit margins. And I think when you do also look at the gross margins, because it's just a platform basically that people go on to sell things, the gross margins are 70% as well. So the margins they have on this business are absolutely fantastic. And that lets them throw off a lot of profitability. Now, the growth has slowed down because it has had the boom from the CV numbers. If you do actually have a look at the CV numbers and see the boom that it caused in the company, before the CV times, this company was doing 818 million in revenue, and you can see here that the company is now doing 2.6 billion. So you can see here there's been all that demand that's been dragged forward for Etsy. So there is them hard comps they're currently going through here. There's something to bear in mind, but you also look at the profitability point of view. In 2020, the company was doing 76 million profitability. The company is now doing around 400 million in profitability, which is obviously very good. So they're kind of monitoring these CV comps. That's obviously where we saw the share price go a little bit crazy. Now the Wall Street are going, oh, actually you're not going to grow that much that you used to do, so we're going to sell you a little bit cheaper. But I think the valuation they now have sold them to is absolutely ridiculous. Because if you do look at what the company's trading at, obviously we're going to see them once this one-time charge has gone out of accounts. The company's actually going to be trading at 16 times forward earnings. Now for me, 16 forward times earnings is relatively cheap for a company that is forecast to do 7% growth this year, hopefully go close to double-digit percent growth next year. That's quite cheap for a company that's growing at them sort of levels. And as well as that, when you're throwing off profit margins of 18, 19, 20% profit margins, that's also really good as well. You know, throwing off 400 million, 500 million profitability, if we actually forecast what we're going to do next year, so, you know, 400 million profitability up to 500 million profitability, that is actually really good amounts of profit. Now, granted, they used to have a lot more growth, but you can see here what the company historically has traded at is 60 times earnings, 70 times earnings, 80, 90 times earnings, 62 times earnings, 58 times earnings. So even though the growth might be a little bit slower going forward, I think putting this company towards a point of view where they're now 16 times earnings is a little bit silly in my opinion. And obviously one thing to, this stupid paywall here, other thing to kind of put in there is obviously, you know, 1 billion buyback of shares. You know, you got to remember as well, on top of all this right now, the company's going to buy 1 billion back of shares on an 8 billion market cap company, which is, shows you when you've got when you're throwing off 400 million profitability a year, you can afford to do those big buybacks, which is absolutely amazing. So I guess why is the stock down? Because obviously that was all very positive about the company. Well, I think there's 3 reasons the stock is down. So I think the first reason is there's been a little bit of negativity after some of the Etsy sellers have been coming out and saying that they want to boycott the site because Etsy have been freezing their payments. Now for me, I've actually looked into this and this looks extremely exaggerated. What's happened is Etsy used to have the thing where people would pay and sellers would be able to take the cash out straight away. Now, as you know, if anyone's been a seller on eBay or if you've been a seller on Amazon, Amazon is something like 28 days, eBay is like 14 days or something. And when you sell something, you can't get your money out for a couple of weeks. And that's in case you are a scammer and you have scammed someone and they can refund the money, or you want a refund and they can refund that straight away to the seller. Etsy didn't used to do that much, and they have increased it slightly where they hold the money a little bit back so sellers can get a refund. So Etsy didn't used to do what Amazon and eBay do, but they are doing it now to help protect the sellers a little bit, which is a bit of a pro as if you are a buyer. You know, if you're trying to buy something off a seller, you know, you go, oh look, I can get my money back if so and so happens. That gives you a little bit of confidence. So for me, I think it's some Etsy sellers that do need to get a bit of a reality check that they're just kind of moving in line with other sellers like Amazon and eBay. And realistically, if you're making good money off Etsy, are you really going to go, actually, I'm going to take my whole business off Etsy? You're not, are you? So I think this is all talk and it's nothing to really worry about. So that's maybe one of the reasons. The second reason why I think Etsy could be low is this one-time charge. I think people aren't realizing that when they come out of this situation, they're actually going to be around about 16 times forward earnings, which is obviously very, very good. So I think that's something that people aren't realizing. I think, you know, a lot of Wall Street at the moment are focusing on profitability a lot, and they aren't realizing what the actual profitability is without that one-time charge. So I think Wall Street are sleeping on it from that point of view. And the last thing I think is the balance sheet. So obviously, you know, companies with high debt are not being liked a lot at the moment on Wall Street, and at the moment, because of acquisitions, Etsy do have 2.2 billion of debt on the balance sheet. Now, it does seem okay because they do have 1.1 billion of cash, and like we said earlier, when you're a company that's throwing off 400, 500 million of cash, it's not that bad having that amount of debt. You know, they should be able to pay down that debt quite easily over the next few years if they generate that amount of cash. So I've got to say, that's one of the things that has always put me off Etsy is the balance sheet, because they do have a lot of debt. However, I've got to say, what makes me okay is that they do have a fantastic cash balance, and when you know, they can pay this debt off within a couple of years if they throw off the profitability that they are doing right now. So what we'll do is have a quick look at some of the numbers and see what upside we're seeing here. So I have factored in a share buyback because it is a very big share buyback. So the top number is without a share buyback, the bottom number is with the share buyback in. I've done revenue growth of 5%, that's a little bit cautious. Obviously we expect them to go to 10+% revenue growth going forward. So that's a little bit of room for error. Revenue growth of 10%, that's where I think they should get back to. I put 12% on the higher side if they are able to get a little bit more out of the business going forward. We'll see what happens. Profit margins, 15, 17, 19%. Now, like I said, the key thing for me for Etsy is getting the profit margins up. That will be the big difference for this company. So you can see here they were able to get to 20+% profit margins, and they have slowly dipped into the 17% profit margins. So they need to get the profit margins up a little bit more. Obviously, selling the Brazilian platform that we talked about could help them as well with that a little bit. So obviously they've got a lot of gross margins to play with as well. So I think they can drive up that profitability a little bit more. That's going to be the key thing for them. So I put 15 on the low side for a bit of room for even in case there's a bit of an error or something goes wrong. 17%, which I think is fair, and 19% on the high side if we can get to 19%. Multiple of 20 times earnings, which I think is fair for a company that's got these profit margins and that growth. And you can see on the low side, it's 21-36%, which gives us that if it does go wrong, at least we're going to be okay. If we look at the mid side, we can get to a decent amount of return, and on the high side, if they are able to hit the higher numbers, that's where we have a bit of a 100% return. Now, a few of you guys might say, well, Jacob, you always aim for a 100% return on your stock, and on your middle side, you're not getting that, which is very true. But if you look at the start of the video, I said this is why I need the stock to go to $50. If it goes to $50, that is where I come a buyer, because the upside is a lot more. The other things that I think are worth factoring in here is the profit margins. If they are able to drag the profit margins up to 20% profit margins like they used to do, look at that. You see, that makes a big difference. So there's that's where the factors come in. I like it a little bit cheaper for the risk to reward, and also the big thing that will probably make or break this investment is if they're able to drag up to 20+% profit margins once again. Another thing that will make a big difference as well is what the market trades it at. So at the moment, the market is trading this at a very, very low valuation at the moment. Let's say the market turns around and goes, oh, Etsy's actually doing really well right now. You know, they're growing back at double-digit revenue growth. The profitability is back at 17% profit margins. You know, this is a company that's growing at good rates with good profitability. How about we trade it at a bit of a premium? Let's not trade it at 20 times earnings. It's a premium company. Let's trade it at a bit of a premium valuation. And let's say the market goes around and says, oh, instead of 20 times earnings, let's actually put this company at 25 times earnings, for example. And once again, you'll see that is where another big difference will happen with this stock. So there's a few variables that can happen in this business. The variables being is that we need to see the profit go up. We need to see the buyback happen, and we need to see the market trade it at a little bit more of a premium valuation. If any of those three happens, that's where I think this comes a really good valuation. So you can see why I've kind of bought a position here, and you can see why if it goes a little bit lower into that $50 range, that's why I do really like this business. But overall, I think a company that's growing double digit, trading at forward times earnings of 16, throwing off a good nearly 20% profit margin, I think this is a very, very good business with e-commerce set to grow, and Etsy will grow in the next few years. I think this is a really, really good business that's getting a little bit too low now, and there's a little bit too negative sentiment around this company, and I thought, you know what, I'm going to buy it. So I have bought it. I think there is good upside from here. Like I said, if you can go a little bit lower, that would be absolutely perfect. But I think Etsy is a very, very good addition into the portfolio anyway. Hope you enjoyed the video, guys. It is a bit of a longer one, a bit of one of those deep dives into the companies. I know you do like these, but it just takes a little bit longer to put a video together. But I hope you enjoyed it anyway, guys. Thanks so much for watching. I'll see you in a bit.